4:47 a.m., April 14th, 2026. Naval Station Norfolk, Virginia. 14 NCIS vehicles moved through Gate 5 simultaneously, headlights off. Inside each vehicle, agents reviewed their assignments one final time. At the same moment, 3 separate federal teams were positioned outside locations in Virginia Beach, Baltimore, and Atlanta, waiting for the go signal. The operation had been building for 4 months. Estimated fraudulent procurement payments, $67 million. Estimated unrecovered assets overseas, $25 million and climbing. The target wasn't a cartel, not a foreign intelligence operation, not a weapons smuggler. It was a network of 11 shell companies that had learned to speak the Navy's own language. Purchase order numbers, national stock numbers, vendor codes, fiscal year budget cycles, and used that language to drain $67 million from 7 East Coast naval installations over 22 months. The operation that began at 4:47 a.m. on April 14, 2026, was built entirely on one federal tip, submitted by a GS-7 procurement analyst with no investigative training, no security clearance above the minimum required for her position, and no expectation that a single invoice review would lead anywhere beyond a correction memo. It started with an invoice. Her name was Carla Myers, 31 years old. She had worked in the supply chain office at Naval Station Norfolk for 4 years, processing an average of 300 procurement invoices per week. That's roughly 62,400 invoices over the course of her tenure. Parts orders, maintenance contracts, supply requisitions, equipment upgrades. Most weeks, the work was routine to the point of being mechanical. Vendor name, NSN code, quantity, unit price, total, installation code, authorization signature. Repeat. On the morning of December 9th, 2025, she was working through a batch of invoices submitted against the USS Kearsarge. Landing helicopter dock, hull number LHD-3, home ported at Norfolk. Specifically, she was processing a request for 17 hydraulic actuator assemblies used in the ship's deck elevator systems. The vendor on the invoice was a company called Coastal Marine Solutions, LLC, registered in Virginia Beach. The unit price was $4,200 per assembly. Total, $71,400. Something stopped her. She pulled up her processing history. She had processed a nearly identical invoice 3 months earlier, October 3rd, 2025. Same part numbers, same quantities, same ship, different vendor. A company called Atlantic Ship Services, Inc., registered in Maryland. Different price, $3,800 per assembly. Total, $64,600. Both invoices had been submitted through the standard procurement portal. Both had passed the automated validation checks. Both had received payment authorization. Same parts, same ship. 2 different vendors, 2 different invoice dates, both paid. Myers opened the ship's maintenance log. The elevator systems on the Kearsarge had been serviced once in that period. 1 service event, 1 installation of hydraulic actuator assemblies. She was looking at 2 payment records for a single delivery. Either the records were wrong or someone had been paid twice. She printed both invoices. She wrote a comparison summary by hand on a legal pad. Part numbers, NSN codes, quantities, vendor names, prices, payment dates, installation reference codes. She went line by line. Every field she could cross-reference, she cross-referenced. She checked the NSN codes against the central parts database. They were identical down to the last digit. The part was specific enough. A hydraulic assembly used in a specific elevator system on a specific ship class. That there was no reasonable interpretation involving 2 legitimate separate deliveries of the same components in a 3-month window. She brought it to her supervisor, a GS-11 named David Kowalski, during the morning stand-up on December 10th, 2025. She brought both invoices, her handwritten comparison, and the maintenance log extract. Kowalski looked at the materials for about 2 minutes. He told her it was probably a clerical error, a data entry mistake in the vendor system, a duplicate submission that would be caught in the next quarterly reconciliation. He told her to flag it in the procurement system under the duplicate review queue and move on. She flagged it in the system. She went back to her workstation. She did not move on. Over the next 2 days, she ran a broader search. Using the same vendor names, she pulled every invoice they had submitted to any installation in the regional procurement database she had access to. Coastal Marine Solutions, LLC, 63 invoices to 6 different installations since March 2024. Atlantic Ship Services, Inc., 41 invoices to 4 of the same installations since February 2024. She cross-referenced the NSN codes across both vendors' invoice histories. She found 14 additional instances where the same specific part number had been invoiced by both companies to the same installation within a 6-month period. The pattern wasn't a clerical error, it was systematic. On December 12, 2025, Carla Myers submitted a tip to the Naval Criminal Investigative Service field office in Norfolk. She attached both of the original invoices, the NSN cross-reference she had run, and a 2-page summary she had written on her own time the previous evening. She documented the 14 additional pattern instances she had identified. She noted that her supervisor had characterized the initial finding as a probable error. She submitted the tip without telling her supervisor she was doing so. The tip was logged at 11:14 a.m. It was assigned a case number within 6 hours and forwarded to Supervisory Special Agent Raymond Cho by end of business the same day. Cho read the summary on a Friday afternoon. He read it twice. He read the 2-page analysis a third time. He had been with NCIS for 14 years, the last 6 in procurement fraud investigations. He had seen tips come in from a lot of directions. Anonymous hotline calls, disgruntled contractors, junior officers who had noticed something wrong on a balance sheet. What he was reading was unusually specific. The cross-referenced NSN data alone represented hours of work. Whoever had written this hadn't called in a hunch. They had built a case before they picked up the phone. He pulled up the Navy's procurement database and ran searches on both vendor names. He ran a broader search on the regional installation payment records using the NSN codes Myers had flagged. He spent 2 hours on a Friday afternoon mapping the preliminary pattern. By the time he left the office, he had identified not 14 additional pattern instances, but 27. He called the Defense Criminal Investigative Service the same evening. He spoke to a special agent named Marta Langford for 30 minutes. He described what he had found. Langford asked him to send the full file. She called him back on Saturday morning. What the 2 agencies found over the next 4 months was not a clerical error and not a coincidence. It was deliberate architecture, patient and sophisticated in a way that suggested the people who built it understood procurement systems from the inside. DCIS Special Agent Marta Langford was 46 years old and had spent 11 years investigating procurement fraud before joining DCIS from a private sector forensic accounting firm. She had worked on cases involving inflated invoice schemes, phantom delivery fraud, kickback arrangements with contracting officers, and ghost employee payroll schemes embedded in federal contractor payrolls. She had not worked a case quite like this one. The 11 shell companies were not competing with each other. They were coordinating. Langford's financial trace, built over the first 6 weeks of the investigation, established the rotation pattern with high confidence. Each company would enter a new installation relationship by submitting legitimate invoices, real parts, actual deliveries, correctly priced, properly documented, for a period of 3 to 6 months. This established the company as an approved vendor in the installation's procurement system and built a payment history that would pass standard review thresholds. Once the vendor was coded as active and approved, the invoices would shift. Part quantities would begin to inflate incrementally. Never dramatically, always within the range that might be attributable to price variation or market conditions. Then, once a second company in the network had also established itself as an approved vendor at the same installation, the duplicate submissions would begin. The pattern was designed to stay below the level at which any single invoice would trigger a mandatory manual review. Most of the individual fraudulent invoices were under $100,000. The aggregate fraud was $67 million, but it was assembled from hundreds of smaller transactions spread across 7 installations, 11 vendor accounts, and 22 months. Langford described it later in court filings as a distributed attack on a centralized system. The centralized system, the regional procurement database, was not designed to identify cross-vendor duplication at the NSN code level in real time. It was designed to validate individual invoices against individual vendor records. Myers had caught the duplication because she personally remembered processing the earlier invoice. No automated system was doing that work. The internal audit systems at all 7 installations had flagged anomalies during the 22-month period. 4 separate internal audits had been initiated. All 4 had been closed without action. The duplicate submissions were spread across enough vendors, enough part numbers, and enough fiscal quarters that no single auditor reviewing a single installation's records had seen the full pattern. The fraud didn't beat the technology. It beat the organizational structure. The fact that 7 separate reporting chains existed where one cross-installation view would have been needed. I spent time going through the audit trail in this case, and one detail kept coming back. The system flagged the anomalies correctly. It generated the alerts. A fourth quarter 2024 anomaly report at Naval Air Station Oceana had explicitly noted elevated duplicate NSN submissions across 2 vendor accounts. An auditor named Paul Ferreira had escalated the finding, characterizing it as potentially indicating vendor coordination. His escalation had been reviewed and closed by a contracting officer who determined the anomaly didn't meet the threshold for NCIS referral. Ferreira's memo was technically correct in its characterization of the pattern. Ferreira submitted his memo in September 2025. The scheme continued through October, November, and into December before Meyer's tip reached NCIS. During those 3 months, approximately $12 million in additional fraudulent invoices were submitted and paid. The financial trace led to destination accounts. 3 of the 11 companies were identified as the primary submission vehicles, the entities processing the largest individual invoices and receiving the largest direct payments. The other 8 companies served as buffers, receiving smaller payments that were moved through a series of LLC to LLC transfers before arriving at a set of accounts held in the name of a Virginia Beach holding company called Tidewater Strategic Partners, LLC. Tidewater Strategic Partners, LLC was registered to a 63-year-old man named Gerald Ostrowski. Ostrowski had retired from the United States Navy in 2019 after 26 years of service, achieving the rank of commander. His career had been in supply chain and logistics management. His final active duty posting, the one that mattered most to the investigators now looking at his financial records, had been as Deputy Director of Procurement Systems at Naval Supply Systems Command, the office responsible for the architecture of the regional procurement database that the shell company network had been exploiting. He had not just worked within the system. He had helped design it. What's most surprising about this case isn't the $67 million. Procurement fraud at that scale, while significant, is documented in federal cases going back decades. What's surprising is the specificity of the exploitation. The blind spots in the Navy's procurement database. The cross-installation deduplication gap, the vendor rotation window, the invoice threshold below mandatory manual review. These were not bugs that a casual observer would discover. They were architectural features that would only be visible to someone who understood the system's design logic from the inside. Ostrowski had that knowledge. He had apparently retained it for 5 years after retirement and had applied it with considerable precision. By February 2026, NCIS and DCIS had mapped the network structure with sufficient confidence to begin identifying all 8 active participants. Ostrowski was the architect and principal beneficiary. Kevin Draper, a retired Navy Chief Petty Officer who had served under Ostrowski at Naval Supply Systems Command, was the operational coordinator for the Virginia Beach companies, handling incorporation, bank account management, and invoice submission schedules. Marcus Webb, a logistics contractor with multiple Navy connections, served as the coordinator for the Maryland operation. Patricia Osei and Troy Billups managed the Georgia entities. 3 other individuals, identified in the indictment but not named here pending final sentencing, served as secondary coordinators, notaries, and payment relay accounts. The investigation had been running for 10 weeks when DCIS ran a standard background check on Troy Billups. Billups had a prior federal conviction, wire fraud, 2017, 18-month sentence, released in 2019. He had been placed on the federal debarment list, the roster of individuals barred from participating in federal contracting, upon conviction. He was still on that list in 2026. He had been receiving payments routed through the shell company network for over a year. The debarment list is a standard check. It runs automatically in the procurement system when a new vendor is registered. It does not run automatically against individuals who receive payments through registered vendors. Billups wasn't a vendor. He was a payment recipient inside a corporate structure. The debarment screen never touched him. Put yourself in Langford's position for a second. You've just confirmed that a man with a recent wire fraud conviction, currently on the federal debarment list, has been receiving procurement payments from the United States Navy for 14 months. Not because anyone circumvented the screening, because the screening was never designed to look at him. The evidence package went to a grand jury in late March 2026. The jury returned indictments against 14 individuals on April 8, 2026. Sealed. Arrest warrants were issued the same day. Then, on April 3, 2026, before the arrest operation had been finalized, Gerald Ostrowski purchased a one-way airline ticket, flight EK231, Emirates, Dulles International to Dubai International, departing April 14, 2026 at 8:40 a.m. The operation was moved up immediately. Cho briefed the Joint Command on April 6th. The operation required simultaneous arrests across 4 jurisdictions: Virginia Beach, Baltimore, Atlanta, and Dulles Airport, to prevent communication between associates. NCIS would handle the Norfolk and Virginia Beach targets. A joint NCIS FBI team would cover Baltimore. DCIS and the FBI Atlanta field office would take the Georgia targets. United States Marshal Service would coordinate with Dulles Airport security and airline staff for Ostrowski. The decision to let Ostrowski reach the airport before the arrest was deliberate. An arrest at his Chesapeake residence on the morning of April 14th would have required coordinating all other arrests within a compressed window, increasing the risk that Ostrowski's phone activity in the minutes following his arrest, calls to associates, signal app messages, anything, could trigger warnings before other teams were in position. At the airport, he would be in a controlled environment, away from communications access, and the other teams would already have completed their work. At 4:47 a.m. on April 14th, the operation began. The Virginia Beach team hit 3 locations within a 4-minute window. The first was the residence of Kevin Draper on Windermere Road. The second was the home of Marcus Webb on Indian River Road. The third was a commercial storage unit facility on Virginia Beach Boulevard, where DCIS had reason to believe physical financial records were being maintained. Draper answered his door at 4:51 a.m. He was wearing a bathrobe. 2 agents stood at the door. 2 more were at the rear of the property. Draper looked at the agents, looked at the warrant, and said, according to the arresting agent's report, "I figured this was coming." He was cooperative from that moment. He was 58 years old, a retired Navy Chief Petty Officer who had worked 20 years in the service, built a modest civilian life afterward, and had apparently spent the last 2 years participating in a federal procurement fraud scheme at the direction of a former senior officer he had trusted. He told agents he was ready to speak before they had finished reading his Miranda rights. The team noted that Draper had no packed luggage, no burner phones, and no cash beyond what was in his wallet. He had not made preparations to run. Webb was different. The team at his Indian River Road residence waited 4 minutes after knocking before attempting secondary contact. They called the phone number on file. They heard it ringing inside the house. They entered under the authority of the warrant. Webb was found in the back bedroom. A packed duffel bag sat on the bed. 2 prepaid phones, both powered off, were on the nightstand. He did not have a flight ticket. He appeared to have been waiting, without a clear plan, to see how the morning developed before deciding what to do. He was taken without resistance. The storage unit on Virginia Beach Boulevard required a facility manager to open. The manager arrived at 5:20 a.m. The unit was unlocked and rolled open at 5:24 a.m. Inside, 8 filing boxes of printed financial records organized by company and fiscal quarter, 2 laptops in soft-sided cases, 3 external hard drives labeled by year, and a fireproof document bag containing original incorporation paperwork for 6 of the 11 companies. The physical records confirmed and extended the financial map that DCIS had built from digital traces. Langford later described the contents as the most complete physical documentation of a procurement fraud scheme she had encountered in her career. The Baltimore team reached Towson at 5:15 a.m. Eastern. Albert Finch, the current bookkeeper for the scheme, was arrested at his residence on Loch Raven Boulevard without incident. He did not speak during the arrest beyond confirming his identity. His home contained a dedicated home office with a desktop computer, 2 monitors, and a filing cabinet with color-coded folders corresponding to each of the 11 shell companies. A preliminary review of the computer confirmed active connections to all 11 company bank accounts. A second Baltimore team executed a search of a commercial mailbox service in Catonsville that had been used as the registered mailing address for 4 of the companies. The service manager, who had no knowledge of the fraudulent purpose of the accounts, provided full cooperation. Investigators recovered 18 months of forwarded mail from the relevant mailboxes: bank statements, State Corporation Commission notices, vendor registration confirmations, and 2 letters from the Virginia State Corporation Commission regarding filing deficiencies that had apparently gone unaddressed. In Atlanta, DCIS and FBI agents reached Patricia Osei's residence in Buckhead at 6:03 a.m. and Troy Billups' address in College Park at 6:08 a.m. Both arrests were without incident. Osei was cooperative and visibly distressed. She stated immediately that she wanted to explain her involvement. She was advised that any statement should be made in the presence of an attorney. Billups said nothing. The Georgia arrests were the last field arrests in the operation. By 6:30 a.m. Eastern, 9 of the 14 targets had been taken into custody. The remaining 5, including Ostrowski, were either in transit to Dulles or had not yet been contacted, pending the airport operation. Here's the take that may get some pushback. Troy Billups' 2017 wire fraud conviction was publicly available in the federal court record. His name appeared on the federal debarment list. The procurement database contained automated screening for debarred individuals at the vendor registration stage. That screening was never triggered because Billups was a payment recipient, not a registered vendor. That gap, debarment screening not extending to individuals receiving payments through registered entities, is not a new vulnerability. It's a known architectural limitation. The fact that it was still exploitable in 2024 and 2025, after a decade of procurement fraud cases involving shell company structures, is worth examining. That's not an indictment of any individual auditor. It's a question about why the system wasn't updated. At 8:12 a.m. on April 14, 2026, Gerald Ostrowski arrived at the check-in counter for Emirates Flight EK231 at Dulles International Airport. He checked one piece of luggage, a large rolling suitcase. He proceeded through the security checkpoint without incident. He was not flagged. His boarding pass was valid. His passport showed no travel restrictions because at the moment he reached security, the sealed indictment had not yet been publicly filed. He reached Gate C-22 at 8:31 a.m. Boarding was in progress. 2 United States Marshals and 1 NCIS special agent were waiting at the gate. They approached him at 8:34 a.m. One marshal identified himself and asked Ostrowski to step to the side of the boarding lane. Ostrowski looked at the 3 men for a moment. He looked at the boarding pass in his hand. He stepped to the side. He was placed under arrest at 8:35 a.m. He was advised of his rights. He did not speak. A marshal's report noted that his carry-on bag contained a laptop, $8,400 in cash, and a folder of documents that included what appeared to be a lease agreement for a furnished apartment in the Jumeirah district of Dubai. A 12-month lease, signed, with a move-in date of April 17, 2026. 3 days. He had timed it for 3 days after the flight. He was transported to the Alexandria Detention Center for processing. 14 individuals were in federal custody by mid-afternoon. The joint press release from NCIS and DCIS described the operation as the largest procurement fraud prosecution in East Coast naval history by dollar amount. 14 individuals, 7 installations, 11 shell companies, 22 months, $67 million. Asset freeze orders were executed simultaneously with the arrests. A federal judge approved freezes on 41 separate accounts and asset holdings within 72 hours. Total frozen, $41, $2 million, approximately 61% of the total fraudulent payments. The remaining $25. $8 million had moved through international transfers to accounts in the United Arab Emirates, Cyprus, and the Cayman Islands. Some portion of that amount had been moved again after the initial transfer, layered through secondary accounts that required international legal cooperation to trace. Recovery proceedings were initiated through mutual legal assistance treaty processes with all 3 jurisdictions. Within 60 days of the arrests, $6. $1 million had been provisionally frozen in a Cypriot account. The current location and recovery status of the remaining $14 million or more remained unresolved as of the last publicly filed case documents. What do you think? Did the procurement oversight system fail at the institutional level, or were individual auditors at fault for not escalating the anomalies they flagged? The alerts were generated. The flags existed. Something stopped them from reaching NCIS. Drop your take in the comments. The cooperation agreements began quickly. Kevin Draper entered into a formal cooperation arrangement with prosecutors within 2 weeks of his arrest. His cooperation was characterized in subsequent court filings as substantial. He provided documentation, testimony, and access to communications that confirmed the network structure, the roles of each participant, the timeline of the duplicate submission scheme, and the methods used to coordinate cross-installation activity. In exchange, prosecutors agreed to recommend a significantly reduced sentence at his eventual sentencing hearing. Marcus Webb also cooperated, though over a longer timeline and with more limited scope. He provided information about the Georgia operations and the payment routing architecture for the Maryland entities. He declined to provide information regarding certain financial transfers that DCIS believed were connected to the overseas account holdings. Investigators characterized his cooperation as significant but incomplete. Albert Finch pleaded not guilty and retained private counsel. His attorney filed a motion arguing that Finch had functioned as a legitimate financial services contractor who had been engaged to manage accounts for companies he had no reason to believe were fraudulent. The motion was pending as of the last available court filing. Several legal analysts commenting on the case publicly noted that Finch's defense faced significant challenges given the volume and organization of the records found in his home office. Patricia Osei also pleaded not guilty. Her defense was substantively similar to Finch's. She had registered companies on behalf of a former professional contact who had represented the entities as legitimate defense contracting ventures. She maintained that she had no knowledge of the fraudulent purpose of the companies. Troy Billups entered a guilty plea to conspiracy and wire fraud within 60 days of his arrest. It was his second federal fraud guilty plea. He did not cooperate with prosecutors regarding the overseas accounts or any financial activity outside the scope of his direct involvement. Sandra Wu, the bookkeeper at the accounting firm who had managed some of the shell company accounts for approximately 6 months before her client assignment changed, was not charged. Prosecutors reviewed her work records and determined that her involvement had been peripheral and that she had processed routine bookkeeping for accounts she had no reason to examine for fraudulent patterns. James Holden, the Virginia Beach notary who had handled incorporation paperwork for 6 of the 11 companies, was not charged. He cooperated fully with investigators and provided all records in his possession. One detail in the case record stayed with me after reading the full investigative summary. Paul Ferreira, the auditor at Naval Air Station Oceana, who had escalated a finding in September 2025 that correctly characterized the vendor pattern as potentially indicating coordination, had written 3 paragraphs in his escalation memo that described the cross-vendor NSN duplication in terms nearly identical to how DCIS would later characterize it in the indictment. He had the pattern right. He had used the correct vocabulary. His escalation had been reviewed and closed by a contracting officer who determined it didn't meet the threshold for referral. There's a line in the case summary that reads almost like fiction. The investigation determined that the internal audit process had engaged with the same underlying data pattern 4 times across 4 separate installations and had not produced an NCIS referral on any occasion. The 5th engagement, Myers' tip, was the first to leave the internal chain entirely and go directly to federal investigators. That's not a commentary on the auditors. It's an observation about what internal reporting structures produce when the fraud is distributed across their jurisdictional boundaries. Will this type of scheme emerge again within the next 5 years? The vendor rotation method, the cross-installation duplication, the debarment screening gap. None of these vulnerabilities are unique to the Navy, and the architectural limitations of the procurement system haven't been publicly corrected as of the last available disclosure. Comment yes or no, and tell us what single change you think would matter most. Gerald Ostrowski's trial was scheduled for November 2026 in the Eastern District of Virginia. He faced a maximum combined sentence of 30 years on the charges filed against him, including wire fraud, conspiracy, money laundering, and aggravated identity theft related to his use of former naval credentials to access procurement documentation during the scheme's setup phase. His attorneys filed a motion to suppress evidence obtained from his laptop at Dulles Airport, arguing that the scope of the search had exceeded the arrest warrant's parameters. That motion remained pending. The sentencing schedules for the other 13 defendants extended across late 2026 and into early 2027, dependent in part on the progress of cooperation agreements and the outcomes of pending motions. Carla Myers continued working at Naval Station Norfolk. She was not called as a witness in the initial criminal proceedings. Her tip submission and her handwritten invoice comparison were entered into evidence as documentary exhibits, Government Exhibits 1 and 2 in the filing. Her supervisor, David Kowalski, was interviewed by NCIS and not charged. Investigators determined he had no knowledge of the scheme and that his assessment of the initial finding as a probable clerical error, while incorrect, reflected a reasonable interpretation with the information available to him at the time. NCIS Special Agent Cho's written case summary contained a section specifically addressing the detection mechanism. He wrote that the investigation had identified Myers' tip as the sole external trigger for the case. He noted that the internal audit process had engaged with overlapping data 4 times across 4 installations without generating a federal referral. He stated the sequence of events in the order they had occurred and moved on to the next section. The network is dismantled. 14 individuals are charged. $41 million is frozen and pending forfeiture proceedings. $25 million is somewhere else. $14 million of it, the portion that moved through secondary international transfers after the initial routing, remains unaccounted for in the publicly available case documents. Recovery proceedings are active. International asset recovery through mutual legal assistance processes takes years under the best circumstances. The procurement system that Gerald Ostrowski helped design and then helped exploit has been reviewed by Naval Supply Systems Command. Specific remediation measures have been identified in internal communications. A public timeline for implementation has not been disclosed. And somewhere in a supply chain office at a naval installation on the East Coast, there are invoices waiting to be processed this week. Most of them are exactly what they appear to be. If you've been following this investigation and want to know how the sentencing phase develops, and there are aspects of the overseas asset recovery that haven't appeared in any public filing yet, subscribe. We cover these cases from indictment through sentencing. The clerk noticed. The system didn't. That's the whole story.